So how does HP work? Well, to keep things simple, HP is a company that makes computers and printers. Their computer division is powerful, offering solutions for reasonable prices and also high-quality computers for video and graphic editors, gaming, or other professional business applications. After owning numerous computers, I've been most impressed by HP. I understand this is my opinion, however, it seems that there are some extra features on a high-quality HP that you don't get from another manufacturer for the same price. A great example of this would be the numerous lights on an HP laptop keyboard that highlights the caps lock, disabling your microphone, sound, and camera keys in addition to the power button, also having a small light to signify if the computer is on or not. Also, I've noticed the build quality of HP computers tends to be better for the price as they use higher quality materials with gloss displays and metals for durability. However, Dell and other manufacturers offer these features at the right price, and HP doesn't offer these high quality build materials with cheaper computers. For the printers, the company has established a business that can generate income for long periods of time. When a company buys professional printers or a person buys a personal printer, HP charges a hefty price, around $20 per ink cartridge for refilling ink. So if you want black ink, it's another $20, and then if you want tricolor or color ink, that would be $20 as well. This has helped sustain consistent income for HP for long after the customer buys a printer. There are other competitors in this space, however, HP holds the largest market share at this time in the industry worldwide according to Statista. We will talk more about the industry in a moment. HP's market cap is $41 billion, making it a large cap stock, and the company was founded in 1939. Now let's analyze the industry. I'm concerned about the growth of the printing industry with less of a need for printers as there has been a push for online learning and work. This concerns me, however, analysts have projected growth in the printing business for the next 10 years, so it's hard to say. 3D printing is still a segment of the printing business that I think will be unaffected by the shift, and I think that this could even grow in the long term. On the other hand, the computer industry has struggled to grow, which we will show you on another slide, and HP has been able to maintain and grow its market share in the computer market over the past 15 years, which is part of the reason why I think HP shareholder value has grown in recent years. The computer business is needed more than ever with online work, and so first quarter PC shipments worldwide have increased dramatically in 2021 after declining for the past 5 years. I'm concerned with the previous rate of decline in the market for PCs as a result, but I also don't expect PCs to fall out of favor, so it's hard to say, but I don't expect strong growth from this industry in the future. HP's price to earnings is a relatively low 7.05, and an HP competitor, Dell, trades at a price to earnings of 6.81. The Dow PE is currently around 22, while HP trades at a relatively low price to earnings of 7.05. HP's price to earnings is also fair compared to its past PEs, and that can help suggest a fair valuation of the business on the stock market. And for the price to book, we have the same situation. HP's price to book is low relative to other companies in this field. Currently, HP rocks a price to book of 6.47, but compared to Dell, which has a price to book of 3.17, HP has a higher PB. I also want to note that this is a high PB relative to the S&P 500 PB of 4.82 currently, which is near the price to book of the S&P 500 during the dot-com boom. This can be risky since HP has a higher PB than 4.82, and remember, lower is better. In terms of the intrinsic value, the company seems to offer an upside of 53%. After projecting the next 10 years of discounted cash flows from the past 10 years of cash flows, with a perpetual growth rate of 2.5% and discount rate of 9%, the company has an intrinsic value of $57.39 per share, relative to a recent closing price of around $37.60 a share. However, we must note that this is just one way to calculate the intrinsic value. There is many ways to calculate the intrinsic value, so please keep that in mind. I also want to note the company's earnings as their free cash flow, EBIT, and net income appear to be generally flat over time due to the split of Hewlett-Packard Enterprises in 2015 and the general decline of computer sales over the past decade. HP buys back its own stock, reducing the outstanding shares of the company. The company still has been willing to repurchase stock since 2005, and this benefits the shareholders as it increases the company's shareholder value. When a company buys back its own stock, book value increases and the intrinsic value increases, and there are less outstanding shares in the market. However, this should only happen when a stock is believed to be undervalued, because the money can be otherwise reinvested back into the company for growth, research, and acquisitions instead. This also goes for dividends. The company currently pays a dividend equivalent to a 2.62% annual yield with a quarterly dividend of 25 cents per quarter, so $1 per share per year. This is great as the company is trying to distribute some extra funds to their shareholders. Like I mentioned earlier, the company could reinvest this money. However, they are clearly determining that this money is extra and can be distributed to the shareholders without harm to the business. So overall, what do we think about HP? HP appears to be undervalued at the time of recording in our view due to our relatively low priced earnings and intrinsic value higher than the current trading value of the company's stock. Over the long term, I don't expect the earnings of HP to grow steadily since I expect a drop in computer sales due to the relatively high computer sales over the past year. Also, I'm concerned about the printing industry's growth, and therefore this may be more of a value play rather than a growth play. Lastly, this company offers a relatively safe dividend and consistent stock buybacks that grow shareholder value over the long term.